We are taking stock of Havells India and how the earnings have panned out over the quarter gone by, and it's been another very steady performance, especially when it comes to the top line growth, well, coming in at around 28%. Well, some concerns with respect to a possible contraction in margins, but on the whole, well, the quarter looking good. Well, to take us through the quarter and what we can expect from the outlook, I'm in conversation with the Managing Director and Chairman of the company, Anil Gupta. Mr. Gupta, good morning and thank you for joining us. Let me begin by asking you about the top line growth. We've seen that steady, robust 28% growth coming in through. From all the reports that I've read, the suggestion is that the government growth initiatives in infrastructure and electrification is essentially what is driving the growth. Can you tell us about that? That's the first part of the question. And the second part is, well, we are also hearing some amount of capital expenditure picking up when it comes to industries as a whole. How are you reading these trends, and what can you tell us about the outlook with respect to business going forward?
So I guess some of our business do get affected by the government initiatives on infrastructure. So yes, underground cables, lighting is getting the benefits from increased investments in infrastructure by the government, and overall capital expenditure has improved in the last couple of years, or especially in the last 1 year. Also, a little bit of uptick in the real estate demand was experienced in the start of the year. So I think overall the demand outlook seems quite healthy. It's just in the last couple of months, due to the NBFC liquidity crunch, there has been a little bit of contraction in consumption, but I think it's very short-lived, hopefully, and things should come back to normal. All in all, it looks like a decent growth coming in the future.
All right, Mr. Gupta, can you also tell us a little more about the role that commodity prices have to play when it comes to your year-on-year contraction in margins as we see it right now?
No, I don't think that should be a major issue. That has not been a major issue. There has been increase in commodity prices in the last few months. But most of the product categories, we do adjustments according to the commodity prices. If they go up, we have to pass it on to the consumer. If they go down, we have to pass it on to the consumer. So it's not really a major issue for us.
But are you witnessing inflation in some of your key input costs at this point in time, especially considering a lot of these commodities are linked to the prices globally, and as we have seen a lot of traction in very, very key markets like China, which actually drives prices for metal specifically. Anything that you can tell us about with respect to outlook for these commodities?
Well, actually, if you see in the last few months, commodity prices did increase, as you rightly said. However, there has been a receding in the last couple of months. So, this is something you're rightly saying, this is related to the international market. So what we have to focus is on not what the outlook for the commodity prices would be, how we adjust it to the consumer, both upward or downward, according to the commodity prices that play. Because we are a branded product company, we can't be taking, calls on the commodity prices. So that's something which we have maintained over the last few years, and that's how we maintain a decent margin levels in most of the product categories.
Right, Mr. Gupta, I also want to address what's going on with Lloyd's. Now, if you consider the industry as a whole, growth has been fairly staggered when it comes to, and I'm talking about the AC industry in general. However, we have seen good growth coming in, but this is also perhaps to a certain extent because of the low base when it comes to Lloyd. My question then is, if we take the air conditioning business, how is that panning out? What about LEDs, and what kind of growth has that provided for this particular quarter? Because there clearly is an outperformance from the Lloyd segment too. And moving in, what can we expect with respect to both these aspects, specifically with Lloyd's?
Well, there is no doubt that the air conditioning demand saw a contraction in this year because of unfavorable season. So Lloyd has also got affected by that. However, there was a move towards the inverter ACs, table change which happened in this year. So a lot of things happened during this year in the air conditioning industry. On the other hand, the company has been making investments in enhancing the product portfolio in the other product categories other than the air conditioners as well, both in LED machines, LED panels and washing machines. So that has also taken a positive steps, and we are experiencing good growth in the other two categories also. In this particular quarter, as you rightly said, the base was small. Also the fact that Diwali was in the middle of November, which helped the demand for LED panels grow faster. So all these things put together, things have looked healthy. But I think over the next few months, hopefully the season for air conditioners should come back. Company has made investments in a new manufacturing facility as well, which should be operational in the coming quarter. So a lot of investments going on in Lloyd, and generally speaking, over a medium term, we are expecting good growth in Lloyd.